Hello and welcome to Bold Profits Market Talk Monday for the week of October 5th, 2020. I'm Amber Lancaster and you are watching the Paul Mampilly YouTube channel, the channel for Main Street stock investors. This past week, Strongheads Nation has been an extremely action-packed week here in the U.S., especially on the economic front. For today's Market Talk, Paul will be joining us to share his insights on current events and give his take on the overall market from an America 2.0 perspective. Now, at the time of this taping, U.S. stock futures are pointing higher for today as traders react to the possibility President Trump may soon be discharged from the hospital, which we do wish him and all others affected by the virus a full and speedy recovery. So where recent U.S. economic data is concerned, we saw a trio of encouraging statistics released last week. And these stats actually underpin our Bold Profits America 2.0 bullish forecast. The first positive sign is from the consumer realm. As this chart shows, U.S. consumers are confident. September saw the largest gain in the Consumer Confidence Index in 17 years. Respondents said, quote, they were more likely to make big purchases in the months ahead, end quote. And a large share of respondents expect, quote, more jobs and better business conditions in the coming months ahead, end quote. And secondly, this enthusiasm is spilling over into the upcoming holiday shopping season forecast, especially in online shopping as well as e-commerce. Per a recent survey conducted by RetailMeNot.com and reported by Consumer Affairs, 66% of U.S. consumers expect to spend the same amount of money or more on holiday shopping this year, and many are turning to online websites to shop their lists. And this plays into our America 2.0 booming retail digital transformation forecast. And thirdly, in my tweet on September 29th, all I could write was WOW, wow. U.S. housing continues to fire on all cylinders. U.S. pending home sales for August hit the highest level on record. It's the highest level since record keeping began in 2001 for this index. And contracts to buy previously owned homes jumped 8.8%, beating estimates of 3.1%, and it's the fourth straight monthly gain. So Bold Profits megatrend millennials who are focused on household formation and ultra low mortgage rates are to thank. But as Paul has been pointing out for years now, this housing boom is not a surprise to us here at Bold Profits, nor our readers. The housing market is booming due to a massive housing shortage that began after the 2008 financial crisis and will be here for years to come. And lastly, I couldn't let this market talk go by without alerting you to the rapid changes happening in one of our Bold Profits megatrends. And I'm referring to the 3D printing industry. And I can tell you I monitor the latest developments in 3D printing through my Bloomberg newswires. And just over the past 7 days, news on significant developments and mainstream breakthroughs in 3D printing are pouring in fast and furious. And most notably, that researchers at the National Institute of Standards and Technology, which is a subsidiary of the U.S. Commerce Department, well, they have discovered a way to 3D print structures that are, quote, 1,000 times thinner than human hair, end quote. And this process can create complex tissue for regenerative medicine. So this breakthrough, as reported by MedGadget, shows that advances in 3D printing are happening now. And it's important to note that the versatility and the usability of 3D printing tech and innovation will be critical as the U.S. begins to process and shift to manufacturing more products domestically and at scale, especially now in 2021 and beyond. And as this forecast chart shows you, valued at $16 billion this year, the global 3D printing products and services market is projected to more than double or grow by 155% to $40.8 billion by 2024. So stay tuned and hold tight as the 3D printing market grows. So joining me now is Paul to give his market take. Hi, Paul. Thank you so much for joining us today.
Hey, Amber. Always excited when it's my turn to come on Market Talk. And I just want to say, compliment you on doing an amazing job. Ian and I have steep competition in terms of getting views within, your views are rocketing up. And for sure, my Tuesdays are lagging, Amber. And nonetheless, we'll leave that all. That's a little internal competition that's going on. Thanks for having me on. And, you know, Amber, Friday there was, at least for some people, dramatic news that President Trump and First Lady Melania have tested positive for COVID. We send our wishes to both of them that, you know, their quarantine period ends and they are well. Nonetheless, many people, Amber, I was looking at what was going on because this was announced on Thursday. And on Friday, people thought, oh, well, this is going to be a repeat of what happened in March. There can be a crash. And I have to say, Amber, that people continue to be incredibly negative, incredibly pessimistic, and generally looking at the world really through the opposite of rose-colored glasses. In other words, markets are rising. Nonetheless, the sentiment generally is really very, very gloomy. And then you've presented a lot of the information, whether it be on housing, transportation, consumer confidence. There's been stories that I've put up in our general Slack channel about like containers being sold out. These are largely manufactured in China, and they're sold out till March of next year. So in other words, and then shipping freight rates are rocketing up. And there's so many different indicators that are telling you that the economy, the underlying economy is incredibly strong. And the base of all of this really is a mix of the things that we have been telling our folks about why we are BOP, bullish, optimistic, positive on America 2.0 stocks, is that the big mega trends are there. And then the millennial generation, Gen Z after them, which is forming the base of housing demand. I mean, the housing numbers you just reported are nothing short of incredible, extraordinary. Yet, Amber, if you go and read Market Watch or the Wall Street Journal, you would never know this.
No.
You would never know that there is an extraordinary, incredible, astonishing, phenomenal housing boom that is actually based on real demand. In other words, this is something that quite very different than what was going on between, let's say, 2002 to 2007, where the government was doing any number of things to goose the demand for housing, and Wall Street was doing any number of things to goose the demand for housing so they could sell whatever they were selling. This, on the other hand, is driven by actual demand where people actually need those houses, want those houses. And because of the financial crisis in 2008, we have not been building houses really for nearly a decade. In other words, there is a significant scarcity of housing. And, you know, at Bold Profits for us, we look at that matters. That's household formation, and that forms the basis of demand for so many things. I also put up that article talking about the appliance shortage. Did you see that?
I did. I saw
that. So now you have a question where we have real demand, and then there's all the impact of the pandemic. And you talk about this on Market Talk all the time, which is that the restocking. And many people may wonder, well, what is this restocking? In other words, buying things that are actually that need to sit on the shelf so you can buy it. That's restocking. Putting this stuff so that for current demand. Then there's re-inventorying. Well, what is that? Well, that means if you go to the back of the store, there's stuff sitting there to replace the stuff that can go on the shelf. And in the past, largely that has been kept empty because we have relied on just-in-time inventory, shipping getting here, assuming that everything was just going to go perfectly. And we learned this year in 2020 that is no longer an option that we can do. In other words, we're going to have at least 1 week, 2 weeks, maybe 3 weeks, depending on your business, depending on what you do, of inventory sitting back there that you can then put onto the shelf in case there is an interruption of some kind. So that's going to take a while to build that. And then there is the third part of this, which is that we are also going to bring back the making of many things from Mexico, from China, and bring them back to our country. And you put all this together and you put this across the supply chain of every single business, every single service, every single product. We're talking about an economy that is going to be on fire, completely on fire. Add on, layer on to top of that, the megatrends, the Internet of Things, artificial intelligence, blockchain, transition to sustainable energy, precision medicine. You put all these together, it's a lollapalooza effect that also has the impact of also shifting something we've really been missing for so long, productivity rises. In other words, for every dollar you put in before, you might be lucky to get $1 back. Now you can get 3 by year 3, 5 by year 5. In other words, rising productivity, which then incentivizes business to go spend the money to implement those technology megatrends. So bottom line, there is definitely two worlds, though. There is America 1.0, which is slowly and surely going away. As I like to say, the destination is certain, only the speed is unknown. And the destination is zero. And you can see that, if you go and look, Amber, back to 2007, ExxonMobil, Amber, was a $500 billion company. $500 billion. It's worth about a tenth of that today. Not a tenth, it's about 20% of that today. Still over 100 billion. Nonetheless, it's no longer anywhere near the most valuable company. And that's a great example of the America 1.0 effect. In other words, those companies are in decline and will continue to be in decline. And there is another group of companies, America 2.0 companies, that we are BOP on, bullish, optimistic, positive on, that are in ascendancy, and are continuing to rise, which is why we continue to be positive. These are the companies that are actually innovating. These are the companies that are actually growing. These are the companies that are taking advantage of the fourth industrial revolution, which is America 2.0, and they are capitalizing on it in every way that they can, which means implementing Internet of Things, artificial intelligence, blockchain, or if you're in healthcare, using precision medicine, rolling that out, telemedicine, so many extraordinary, incredible things, one layered on top of the other. And this is the stuff of booms. And so it's kind of incredible, really, that for the most part, other than Kathy Wood at ARK Invest and a few other folks, there's no one really talking about the fourth industrial revolution. No one that's really talking about the megatrends and what they can do to our society. However, that's great for all of our readers and all of our viewers, because you're in early. And when the other folks figure it out, and they'll come for sure, they're going to come with their hundreds of billions and trillions of dollars. They're going to bid our stocks where we've already made extraordinary amounts of money. The Profits Unlimited equal weighted portfolio, Amber, I looked at it. Our amazing colleague Patrick Goodrich tracks it week to week, is up over 30% this year versus what, like 3% for the S&P cap weighted S&P 500. So you can see the effect of focusing, laser focusing on America 2.0 stocks. All right, I've gone on and on, Amber. You can tell I am BOP on America 2.0, on the fourth industrial revolution, on the coming of age of the millennial generation, the mega trends. So that's what I have this week. And Amber, there's always going to be volatility, and there are always going to be things to worry about, which is why I always say nothing's ever a straight line. Nonetheless, if you can absorb the volatility, use the rules of the game, we believe this is a once-in-a-lifetime opportunity, Amber, once-in-a-lifetime opportunity. So that's all I have, Amber, for this morning. For you, of course, I'll be doing my Bold Profits Daily tomorrow, and then also with Ian on Fridays, the Ian Cast. So that's all I have.
Thank you so much, Paul. We appreciate your insights every time you're on. And so we just want to thank you for visiting us for today.
Thanks, Amber. See you soon.
Finally, turning toward the U.S. economic week ahead, there will be 4 major economic releases. On Tuesday, August's trade balance will post on Tuesday, 8:30 a.m. On Wednesday, NBA weekly mortgage apps will post at 7 a.m. On Thursday, weekly jobless claims will post at 8:30 a.m. And on Friday, the final print for August wholesale inventories month over month will post at 10 a.m. And know that you can follow me on Twitter at Lancaster Guru, as I'll post results as well as our BOP, hashtag BOP, bullish, optimistic, positive take for most economic releases during the trading week. So that concludes this week's Market Talk Monday. Everyone, thanks so much for tuning in. We wish you a healthy, safe, and productive week ahead. And until next time, take care.